Welcome back to the Future Show here on the Schwab Network. It's time to bring in our next guest. That's going to be Bill Baruch, president of Blue Line Futures. Welcome back to the show, Bill.
Thanks for having me. It's always a pleasure to join you.
All right. So, the market's pulled back here a little bit so far this week ahead of CPI data, but S&P is still only about 1% below those all-time highs that we saw last week. I mean, what's your thoughts here on the equity market? It seems like we stalled out, but maybe we need that to catch that next leg up, right?
Yeah, I agree. I think you said it right there. It was stalled out, a little bit of profit taking, a little bit of a buyer's strike. You see with the names that came in, some of the higher flyers, a lot of software names had come in a bit. So I think really the important thing is the indices themselves, held a pretty constructive path. I mean, they're still holding support here, some of the big levels we highlighted in our morning research, but we haven't responded. The market hasn't really rallied off of that. So you're right there. The NASDAQ, for instance, right above those previous record highs. So it's going to be an interesting here when we see CPI and how the market takes it.
Are your expectations of any changes here? Because I kind of glossed over it in the previous segment where I don't know if this number is really going to matter. I think everything is going to be focused on the Fed next week, right?
Yeah, I agree. I mean, CPI, not to say it doesn't matter, it's just had less of a imminent impact on the market. I remember a year ago, 2 years ago, I mean, we would see massive swings in the market and stocks and that really across the board, all asset classes. But, for instance, the core number is expected to rise by 30 basis points and then 3%. I mean, these numbers they are right in line with what we've seen for the last this would be 3 months in a row, the same numbers unchanged. So, I mean, the volatility within the data itself is very muted. So I think the markets has digested that, but anything outside of that, we could see a reaction. But the fact that the stock market has sold off a little bit here into this, I find it more favorable for have a positive setup and reaction to what could be a good number, supportive number for stocks, rather than closing at the highs and melting higher than where we could see a little bit of capitulation at top.
Yeah, 3.3% on the core year over year, 2.7% expected. So we've stalled out as far as that trajectory lower there on inflation. But I think that the market's getting comfortable with it at this point, Bill. But, some of the impacts of the asset classes that go into that, you look at crude oil, we're back above $69 a barrel. I think that $70 a barrel level is key. If we stay underneath there, maybe that'll help the inflationary trends, right?
Yeah, I agree. And just to say that the Fed is looking at symmetrical inflation targeting. They're going to let inflation run a little hot here. I mean, so even though they're talking about the trajectory downwards dying off, I think they want to see it continue lower, but they're not sitting there unhappy. They don't want inflation below 2%. They absolutely do not. So that's something to consider there. Yeah, crude oil, switching back to your questions, crude oil, it has seen some decent response to support. Now, it hasn't really rallied off of it too much. We have a lot of support, $66.5 to $67.5, but it really can't sustain a lot of resistance, a lot of overhead supply, 70, 71, despite some of the geopolitical flares in the air right now. Now, you do have OPEC coming out here just a little bit ago, slashing their demand forecast for 2025, and they're really kind of bringing it more in line with some of the other agencies have looked at for demand in 2025. Now, the wild card here is the fact that they're finally slashing the demand forecast. It really supports holding off on bringing that production back or bringing it back more slowly, as they've highlighted recently. And we do think the market, crude oil, hasn't responded like we would have expected when they made that announcement on pushing back on starting to bring back supply not till April of 2025.
Yeah, we've seen a little bit of a resurgence in gold also here, Bill. It took a little bit of a dive, maybe on the higher dollar, but now it seems like we've righted the ship. 5-week highs here today. What are your expectations for gold? Do we see a resurgence back into that?
Yeah, it's been an exciting week to see gold kind of really rebound. It's been a big week. Now, it got out above a trend line going back to the record highs just before the election, regained the 50-day moving average yesterday as well. So I think this is a big move here in gold. It's trying to tell us something. China is buying gold. They hadn't bought gold since going back to what it was April, added 160,000 ounces in November. Supportive monetary and fiscal policy is also a tailwind. But with that said, I mean, gold's friend silver is not reacting at all. I mean, it's moved up. Let me take that back. It's moved up, but yesterday, put it in perspective, gold from the lows yesterday to the highs last night had a run of more than $50. I mean, $60 move, 3%. Silver was really just muted, kind of right in the same range, and traded lower at some points last night. So we're not really seeing the move in silver. Copper has had some highlights higher, just not really sustaining them and spiking, but overall trekking higher. I find the news out of China being a positive for the metals. However, last night they did talk about being willing to let the yuan weaken ahead of tariffs. So you did see a reaction in copper and silver on the heels of that.
Yep, definitely a dollar up on that news out of China also as they begin their economic meeting. All right, great discussion, Bill. Have a great day.
Thank you very much.
All right, that's Bill Baruch, president of Blue Line Futures, breaking down.